Welcome to the deep dive. It's funny how sometimes the numbers just seem to tell two completely different stories at the same time. And that's exactly what jumped out at us when we looked at crypto venture capital for the first quarter of this year.
Right.
We saw this significant drop in the number of deals being made.
Yeah, quite a fall.
But then the total amount of investment, it more than doubled. A real head-scratcher, isn't it?
It certainly makes you stop and think. It suggests, maybe something fundamental shifted in how investors are looking at the space.
Absolutely. And thankfully, one of you, our very sharp listeners, pointed us towards PitchBook's Q1 2025 Crypto VC Trends Report. It's dated May 14th.
Great resource.
Yeah, so our goal today is really to unravel this apparent puzzle using their analysis, their data. And for those of you maybe not as familiar, PitchBook is a really respected firm for VC and private equity research.
They do good work.
They do. So we have this situation laid out in their findings, almost 40% fewer deals compared to last year. Yet the total investment, like we said, more than doubled. So what's the real story? What's going on behind these numbers? Let's get into it.
Okay, let's start with those numbers because they really set the stage.
Right.
The PitchBook report says in Q1 2025, there were 405 deals done in crypto VC.
405.
Yeah, and like you said, that's down significantly, 39.5% from the 670 deals back in Q1 2024.
Wow, yeah.
But it's actually, interestingly, a slight uptick from Q4 of 2024. That was 372 deals.
Okay, so maybe a bit of stabilization then, at a lower level.
Perhaps, yeah, maybe the bottoming out of the deal count. But then you look at the money side.
Right, and that's where it gets wild. The total value of those 405 deals in Q1, a huge $6 billion.
$6 billion.
Yeah. I mean, put that in perspective. It's more than double the $2.6 billion from Q1 last year.
Right.
And also double the $3 billion from just the previous quarter, Q4.
So investors are making fewer bets, definitely.
Right.
But the size of those bets, much, much bigger. Dramatically so.
So this split, fewer deals, way more money, it really begs the question, why?
Exactly. And Robert Lade, he's PitchBook's senior crypto research analyst. He offers a really key insight here.
Right.
He basically says that even with all the macroeconomic turmoil out there, capital continued to seek crypto's core utility rails.
Core utility rails. Okay, so infrastructure.
Yeah, it suggests investors are becoming more selective, right? They're prioritizing the fundamental stuff, the infrastructure, the services that actually underpin the whole crypto ecosystem, maybe less focus on, the more speculative or fringe projects.
That makes a lot of sense. So where exactly did this big chunk of capital, this $6 billion, actually go?
Well, the report breaks it down. The lion's share, we're talking nearly $2.55 billion, went to crypto asset managers, exchanges, and financial services.
Okay, so the big platforms, the money movers?
Exactly. But what's really striking here is that huge amount, $2.55 billion, was spread across just 16 deals.
16. Only 16 deals for $2.5 billion.
Yep. Which means the average deal size in that segment was, exceptionally high.
Wow. That really shows strong conviction in those established players, doesn't it?
Precisely. It signals this focused investment in the really essential plumbing, buying, selling, managing crypto assets.
Right.
The next biggest area, according to PitchBook, was crypto infrastructure and development firms. They pulled in nearly $955 million.
Almost $1 billion there.
Yeah, across 30 deals. So still chunky deals. And again, it fits that theme of strengthening the foundations, right? The stuff you need for broader adoption and innovation.
Makes sense. And what else? Was there anything else significant?
Well, rounding out the top areas, they mentioned Web3 focused companies. They got 23 deals totaling about $231 million.
Okay. Still decent money, but clearly much smaller focus compared to infrastructure and finance.
Definitely. The main story for Q1 seems to be about those core foundational providers.
Got it.
And this actually brings us to another key point Robert Litt really hammers home. The strength and growing importance of stablecoins.
Ah, stablecoins. Okay.
Yeah, he makes a pretty bold statement. He says, dollar-denominated settlement remains crypto's killer application, insulated, at least partially, from broader risk-off moves.
Crypto's killer app. That's strong.
Yeah.
So for anyone less familiar, stablecoins are the cryptos pegged to something like the US dollar, right? To keep the value stable.
Exactly. And the data really backs up his claim. PitchBook points out the market value of stablecoins grew pretty substantially, 12% just in Q1.
12% growth in one quarter.
Yeah. It went from about $202 billion up to $227 billion.
Wow.
And what's interesting is during that same time, Other cryptos, they were mostly flat or even down.
So stablecoins are growing even when Bitcoin or Ether might be struggling.
That's what the data suggests. It implies that, regardless of the usual crypto volatility, the actual use of stablecoins for payments, remittances, even like companies managing their treasuries, that's becoming more and more relied upon.
Utility shining through.
Exactly. And because of that utility, PitchBook expects we'll see more VC money, near term anyway, going into startups that directly monetize this stablecoin velocity. Think payments, remittance companies, treasury tools.
Okay, interesting. Now, shifting gears just a bit, the report also mentioned something else pretty major that happened, the Bybit exploit back in February.
Oh, yeah, that was huge. $1.4 billion, the biggest hack in crypto history, apparently.
Oof. So how does something like that, a massive security breach, factor into investment trends? Does it scare people off?
Well, obviously, it's a major negative, no doubt, a setback. But it also really shines a harsh light on where the industry needs to improve its defenses, right?
Sure.
And Leth, the analyst, suggests this huge exploit might actually, counterintuitively, drive more institutional demand for better security.
How so?
Because institutions need that safety. So he specifically mentions things like real-time proof of reserve tooling.
So you can prove you have the assets.
Yeah, exactly. And better custody solutions, how assets are held securely. And also middleware that simplifies key management. Basically tools to make things safer and easier to manage securely.
So these awful breaches, while terrible, could actually spur investment into making the whole system safer, especially for attracting those bigger institutional players.
That seems to be the argument. Well, thinks that startups working directly on these security and infrastructure upgrades, they should find a more receptive funding environment, even with valuations maybe being lower overall elsewhere.
Because security is just non-negotiable for serious adoption.
Absolutely. Paramount.
Okay. One last big thing PitchBook highlighted, something on the horizon. Circle's IPO.
Ah, yes, Circle. Big player. Issuer of USDC, the stablecoin.
Right. And Robert Lee had some strong words about this, too.
He did. He called Circle's potential IPO the most important price discovery event for crypto equity since Coinbase listed in 2021.
Wow. Since Coinbase. That's saying something.
It really is. It signals just how significant this could be.
So what are the potential impacts here? Why is it so important?
Well, PitchBook argues that if Circle goes public and gets a good valuation, say higher than the $4 or $5 billion range that's been rumored, that could be a massive validation for the whole sector. It would basically signal to VCs and the market that these business models, the ones built around stablecoins and related financial services, they aren't just viable. They can be profitable, sustainable.
A benchmark.
Exactly. A much-needed benchmark for how companies in the space can successfully exit, provide returns to investors.
And could it draw more money in?
PitchBook thinks so. They suggest that if Circle has a strong roadshow, the process leading up to the IPO, that could attract new late-stage capital into crypto more broadly.
Late-stage capital meaning bigger checks for more mature companies.
Right. And that influx could then push valuation expectations up, especially for companies in payments and infrastructure, the areas we saw getting funding in Q1.
Interesting. And Circle's already raised a lot of VC money, right?
Oh, yeah. $1.18 billion to date. And PitchBook actually puts the odds of them going public at 64%. Reasonably high.
So definitely something to watch very closely then.
Sure. Could be a real bellwether.
Okay, so let's try and pull this all together. If we synthesize everything from this PitchBook report, what are the main takeaways from our deep dive today?
Well, I think in summary, we've definitely seen this big shift in crypto VC in Q1 2025. Fewer deals, yes, but much, much larger total investment. Yeah. And that money is concentrating, it seems, in the fundamental building blocks, infrastructure, financial services.
Especially anything leveraging stablecoins.
Exactly. Those businesses capitalizing on stablecoin utility and growth. And then looking ahead, that potential Circle IPO looms large as a potentially pivotal moment. It could validate the whole space and maybe pull in even more serious investment.
So that initial puzzle, fewer deals but way more money, it really does start to make sense when you see where the money's going. It points towards maybe a maturing market, investors focusing on strengthening the core rather than just, chasing every shiny new thing.
Seems like a reasonable interpretation, yeah. A flight to quality, perhaps, within the crypto space.
And thanks again to you, our listener, for pointing us to this report. It was really insightful.
Absolutely. Understanding these shifting investment currents gives you a much better feel for how the whole crypto landscape is evolving.
Definitely. And with that in mind, Here's maybe a final thought for you to chew on. We've talked about the capital flowing into these foundational services and the potential impact of Circle's IPO. So, thinking beyond that, what other established players, or maybe what emerging technologies, do you think could be the next big price discovery event in crypto?
Good question.
And what would that tell us about the industry's long-term viability, its evolution, beyond just the investment numbers? It's definitely a fascinating space to keep watching.
Indeed it is.
Thanks for taking this deep dive with us.